It's Investor Education Month, and we're going to test your investor knowledge. How well versed in investor knowledge do you think the average Canadian is? According to research done by the CSA, the answer unfortunately is not very well versed at all. During the last Investor Index, conducted in 2020, the CSA tested Canadians coast to coast using the Investment Knowledge Index. This quick 7-question quiz helps to give regulators an idea on if Canadians' investment knowledge is high, low, or somewhere in the middle. In 2020, 49% of Canadians who took the quiz scored low, meaning they got 0 to 3 questions out of the 7 correct. How well do you think you would do? Let's find out. The quiz begins with question 1 on simple compound interest. Suppose you had $100 in a savings account and the interest rate was 2% per year. After 5 years, how much do you think you would have in the account if you left the money to grow? The answer choices are A. More than $102, B. Exactly $102, or C. Less than $102. If you said A. More than $102, you're correct. With 2% interest, you would have $102 after 1 year, so after 5 years, you would easily have more than $102. Let's move on to question 2. Question 2 ups the difficulty slightly and looks at real compound interest. Imagine that the interest rate on your savings account was 1% per year and inflation was 2% per year. After 1 year, how much would you be able to buy with the money in this account? The answer choices are A. More than today, B. Exactly the same, or C. Less than today. The correct answer here is C. Less than today. If inflation is rising faster than interest, your money is not keeping up with inflation, so you will not be able to purchase as much with your money in the future. Question 3 deals with diversification. Is this statement A. True, or B. False? When an investor diversifies his or her investments, the risk of losing money increases. The correct answer here is B. False. Diversification decreases risk because your money is not held in one place and reliant solely on the rise in value of a single asset. Diversification provides a balance and enables you to potentially counter losses in one area with gains in another. Question 4 continues with the risk theme and looks at stock and mutual fund risk. Is this statement A. True, or B. False? Buying a single company's stock usually provides a safer return than a stock mutual fund. The correct answer is B. False. Remember how diversification lowers risk? If you invest in a mutual fund, you are investing in several different assets. An investment in a single stock is a single investment and beholden to its singular value. Question 5 also looks at mutual funds. Is this statement A. True, or B. False? Mutual funds pay a guaranteed rate of return. The correct answer here is B. False. Mutual funds invest in several different assets and can include stocks, bonds, or other securities. They do not have a guaranteed return and do not guarantee a profit at all. Question 6 deals with the warning signs of fraud. Is this statement A. True, or B. False? Investments that offer a higher than market rate of return and little to no risk are almost always fraudulent. The answer is A. True. High return, no risk investments are almost always fraudulent because your potential return cannot increase without your risk also increasing along with it. If you can remember that, you can protect yourself from investment fraud. The 7th and final question is on bonds and interest. Is this statement A. True, or B. False? Bond prices go up when interest rates go down. The answer is A. True. The return on bonds is determined by the interest rate. When the interest rate goes down, the return on your bond also goes down, but the cost of the bond remains the same. You are paying for less money, so the price is effectively increased. So how well did you do on the investor knowledge quiz? Were you like nearly half of Canadians and have low knowledge, or were you among the only 7% of quiz respondents who got all 7 questions correct? To improve your investor knowledge and become an informed investor, visit the Nova Scotia Securities Commission website at nssc.novascotia.ca for investor education content and resources.